Market forecast for August 27, 2025, navigating a risk-off to neutral outlook. This is what you need to know about the market forecast for midweek week starting August 27, 2025. The market forecast is suggesting a more risk-off to neutral-leaning outlook. Let's break it all down together, shall we? Alright folks, let's dive into the market forecast for Wednesday, August 27, 2025. It's one of those days where the market's got us all scratching our heads a bit. We're looking at a more risk-off to neutral-leaning outlook. What does that mean exactly? Well, it's a fancy way of saying the markets aren't quite sure which way they're heading, but they're leaning towards playing it safe. First off, we've got the S&P 500 closing higher, thanks to Nvidia's impressive gains. Traders seem to be shaking off the latest verbal jabs from Trump aimed at the federal. It seems like the market's got a bit of a thick skin today, doesn't it? Now, let's break down what this means for various indices and currencies. Currency outlook, a tale of $2. When it comes to currencies, we've got some interesting dynamics at play. The New Zealand dollar is expected to have a strong bias to the downside. If you're holding onto some Kiwi dollars, you might want to keep an eye on how things unfold. Analysts suggest that economic indicators from New Zealand are not painting the rosiest picture, leading to this downward pressure. External factors, such as commodity prices and geopolitical events, could further exacerbate this trend. On the flip side, the United States dollar is anticipated to have a strong upwards bias. This could mean good news for those with investments tied to the USD. It's like watching a seesaw, one goes up and the other goes down. Fascinating, isn't it? The strength of the USD might be attributed to robust economic data and anticipated rate hikes, which are likely to attract more foreign investments. Stock indices, mixed signals on the horizon. Now, let's talk about the major stock indices. Currently, the Dow, TLT, and GLD are expected to have a more positive to neutral leaning bias. It's like they're cautiously optimistic, not overly excited, but not too worried either. This sentiment could be driven by solid earnings reports and stable economic indicators that provide a comforting backdrop for these indices. However, the SPY and QQQ are expected to have a downwards to neutral leaning bias. This suggests that while there's potential for a dip, it might not be all doom and gloom. It's a bit like walking a tightrope, balancing between caution and opportunity. Investors might be wary due to uncertainties in the tech sector, which could affect these indices more significantly. Practical advice: navigating the market maze. So, what do we do with all this information? First and foremost, remember that this is for educational purposes only. Always, and we mean always, do your own research before making any trading decisions. You might be thinking, how on earth do I keep up with all of this? Well, it's easier than it sounds. Keep informed, watch trends, and don't be afraid to ask questions. If you found this content helpful, we encourage you to like, comment, and subscribe to our channel, All Things Money. We've got more where this came from, and we're here to guide you through the ebbs and flows of the market. Be guided by your inspiration and transformed by your trading journey. Who knows, you might just find yourself enjoying the thrill of the markets as much as we do.